when sessions open or whenever sessions are just like like we're in session Asia, London, or New York, a lot of stop losses will be placed above the highs or the lows of those sessions. So this was actually an example of a Asian session liquidity grab of why I actually took this trade.
All right, folks, here we are on Trading Up. We've got Luca NoLimit in the house. We've just done a fantastic podcast. Now, you're not going to go and want to watch it just yet. He's about to break down the trade he took last night on UJ. You're going to find out how he does his stuff on a price chart. And then after that, you want to go and check out the link below this to get his full podcast. So welcome back to the show, Luca.
Thank you so much for having me, bro.
All right, let's share your screen and get into this.
Let's get right into it. Yeah.
Well, folks, here's my Blue Guardian update for the week. So we can see here that I'm minus 2.6. It was 2.3 last time, so it's basically a break-even week. Didn't start off well, though. Drew the account down here with some revenge trading. Not great. Now, this is when the DX trade thing kicked in, and for whatever reason, this chart doesn't update. So let's dive into that one and have a look. So this is the DX trade chart. Now, yeah, this was just revenge trading streak, which was not great. 3 trades in about like 15 minutes. Anyway, I bought it back here with this trade that matched my system after having a good long hard think about what I was doing. Then I had a couple of not so great trades, which I'm trying to filter out, and I think I've come up with a way to do that, followed by another one that matches system. And then the last day, the price action was just really choppy. I could have walked away with a very good trade, ended up getting out break even, even at a small loss. But yeah, overall, week break even. Now, if you're looking to get your own Blue Guardian challenge and want a 10% off coupon, then use that coupon, Trading Up, all one word. There's links in the description of this video. Folks, remember, they have got MT5 still running for some clients, so please go and check them out. All right, folks, let's get on with the show.
So this is a trade I called last night. I obviously didn't really know that I was going to come and break this down, but I mean, it's a beautiful trade. It actually is sitting at 13 risks to reward. I'm just going to go over kind of some of the confluences I, went over to take the trade so that you guys can possibly go out and take a similar setup. So if you go out to like a 4-hour time frame, the thing off the bat that I can kind of just like identify is this was the, distribution and then the accumulation to then come back down. And I'm looking for this 4-hour demand to get basically targeted. Why? Because this is the 4-hour demand that led to the break of structure. So because this was this big impulse, not distribution. This is the impulse. And then we had like lows to take out. So all I kind of needed to identify on the higher time frames was the lower highs. Like I always kind of talk about just pure structure. Here, here, here. And then we had a big impulse down that broke structure here, but we did not tap into the 4-hour, demand. So I was like, this is still my main target. So because we haven't come down to it yet, I'm still looking for a retracement to take further short. So on the 4-hour, when I was looking at it last night, like closer to where I actually took the trade, I was like, all right, 4-hour looks ugly. It's just kind of consolidating sideways. It was the lower time frames that really got me my entry criteria. So one thing that we're going to go over too is just liquidity and Asian session liquidity. What that kind of means to me is basically when sessions open or whenever sessions are just like we're in session Asia, London, or New York, a lot of stop losses will be placed above the highs or the lows of those sessions. So this was actually an example of a Asian session liquidity grab of why I actually took this trade. So first off, like I said, overall bearish. I was looking for the retracement up to then take further shorts. Going down to like a 15-minute time frame, I was just like, all right, where am I high sitting at? I have a high right here to take out, and if I look left, I have a high of yesterday. So this Asian session range, I use the indicator Sonar Lab sessions. It's completely free on TradingView, and it shows you the highs and the lows of the session that get created. So I saw over here that we had, this Asian session dump, and that we had not taken out the liquidity from this session yet. So the fact that we kind of had consolidated, had this nice trend line to, take to target. I just, if I replay price, you can kind of just I kind of can just explain how after I saw price come out and wick above, I was like, all right, I'm dropped on the 5-minute and wait for my entry criteria. So one thing that kind of has to do, or that I want to kind of emphasize when it comes to taking Asian session liquidity trades, is that you don't want too big of closures outside of the range. What that means is that if this was super bullish and came and just kept closing above, closing above, invalidated. That's showing me that volume is actually pushing up and that the buyers are in control of the market. This to me was a good setup because I also use not only this Asian session liquidity, but I use correlation. So I'm a big correlation trader. If you look at the right side of my screen, most of the pairs that I have are all kind of correlated to each other. Like, like USDK and GU are inverse correlated. GJ and UJ usually move like similar, but if you go to the top, you see I have a whole section called correlation, and these are all the actual pairs um, that I look out for, that I trade for. So when it comes to pairs like GU and EU and stuff, like I literally always will have the DXY up on a separate chart to look at the price action of, all right, if the DXY is starting to go short here and showing like a rejection, that means that GU should go long, vice versa. So same thing with like the JPY basket and GJ, UJ, whatever, is that like they move inverse. So I'm actually able to use correlation as an extra confluence. So at the same time that price was coming up here, had this big impulse up, I was like, all right, well, this for sure needs to get filled. And this kind of goes into like if it closes too far above, why that isn't good is it could just turn into a break and retest to continue higher. Why I like it just to wick through is that it's literally just taking liquidity to then distribute in other direction. So I was kind of talking about this on the podcast, but when I see equal lows, I see liquidity. When I see just these lows that haven't been taken out yet, I just see liquidity of people who are like buying here, above here or above here, like this, who are putting their stop losses under here. It's just clear liquidity, just breakout traders getting in, and then I wanted to come take their stop losses. So this is like my first target was below this low to see what will kind of happen. So what ended up happening is I kind of just, play price is I didn't enter just yet. I kind of waited for consolidation. And then once I actually saw, I was on the 5-minute time frame for my entry, was like this to me was kind of an indecision candle. You see how we keep rejecting? I was like, all right, we tried to go bullish. Now we have another bearish candle. If we break these bearish lows, I actually want to get into the trade. So I'm pretty sure this is literally where I got in, 147.046. And then, it dumped to there. First target got smashed pretty quickly because we had volume and news come out that pushed it in the right direction.
Can I just ask, did you take that? Did you take a limit order on that, or was it a stop order?
Execution? No, I market executed, and I actually called it out. So for anyone out there who actually pulled my Telegram, wondering or whatever, I would bring this up. So you could see here, I literally called it at here. Sell UJ. Can you see this on Zoom? Yeah. So at 4:30 a.m., right before that, it was just to sell UJ position, TP1. I just put TP1 and then I follow up with TP2 and then my target of where I actually think price is going to. So you could see that there's no edited anything. Just a beautiful trade. UJ sitting at 13. Congrats to anyone who took it. So I just wanted to show that just for anyone who's like, oh, he's just marking up a.
Can you remember the exact point that you took the trade? Like, was it the?
It was right. It was right here. It was the break of this candle low that I was kind of talking about. Like I look at these candles as like an indecision candle of like price doesn't know what it wants to do. So right when we got this bearish kind of doji, I took it at the 5-minute low. The 5-minute low is right there at 147.049. My actual entry was 046. So that's actually where like I got executed, kind of came down, kind of wicked up a little bit, but then just, gave us the move that I was anticipating. Beautiful, just like liquidity grab. When it comes to like liquidity grabs, you'll see they move pretty sharply in the other direction once all those stops are like taken out. So the reason why I didn't even end up closing any partials below these lows was because there was really no like reason to. I think one of the biggest things that traders need to understand is just structure. Like this is just like a bearish move, and just because price is going to pull back a little bit does not mean I need to get out of the trade. Markets need to move in this, with higher highs and higher lows, or lower highs or lower lows. It's just like how the market moves. So I try and always emphasize this because now we've got the trend line break. We easily could just retest to continue lower. So I actually didn't close any partials. The first place I actually closed partials at was below, not below, but this demand right here. So the reason I had this demand was because I was like, all right, this demand led to this little impulse. We could just kind of, just consolidate to then come back down and tap to then go back up. So once we kind of came down and tapped here, you'll see that we actually ended up pulling up a little bit. So right when we got the 5-minute break above, I closed partials right there. And then my main zone that I'm aiming for is this H4 level of demand. So like I said, if you go to the 4-hour, this is the 4-hour level that led to this rally. And now we're just getting the pullback into the 4-hour to then possibly continue. So we actually still haven't even hit it. We've just kind of pulled back. So I still think that we're going to pull back later tonight to go. But you can see, this is like current price. You see price is still just like kind of consolidating. It's not even Asian session yet. And once Asian session opens, I'm expecting honestly probably like little push up, and then the rest of the night we're coming back down into this level. And once I get the 4 hour hit is when I kind of have to shift my bias and see, you know what, all right, are we going to reject and now look for buys from this area? Or are we going to break through and continue down? Because if you look at the 4 hour, we're still super bearish. Even though we're coming down to this level of demand, I still think that this demand could just be, you know, to get hit, to then pull back a little bit, to then continue. You know what I'm saying? So that's kind of just my viewpoint on it.
And so did you use your 8 SMA rule in this trade at all?
So I kind of cheated it. If you come down here to where I actually closed price at of that 5 minute break of the highs after the demand got hit, right over here. Oh, I guess no, it did do on the 5. I was on the 15. Yeah, no, I closed right here.
Okay, and that's the 8 there.
Oh, no, this is the 1 minute. No, I was wrong. That was the 1 minute. My fault. Yeah, no, I was correct. Like I said, I cheated a little bit. Price was looking like it was going to go close above the 8, and I was happy. I mean, you got to think, when I was already at this level, I was up, you know, 1 to, just go and see, 1 to 11.4, you know what I'm saying? So I was like up 11%, or no, the high was like 9.5. So that's where I got out. I thought price was going to come and close above the high because we had this, like, I literally remember this last night. This was like, you know, so early in the morning. This kind of flip, you know, it was kind of bearish and it flipped bullish for a second. And I was like, okay, volume's going to come in. We're going to shoot up. I closed it. I was like, closing partials. Finally, I'm going to bed. And then I set my TP at this H4 level right here. I think we're going to pull back a little bit, but I think the overall target is still this H4 level of demand, you know, so I'm just literally waiting for price.
And what about the partials? What partial did you take?
20%. So I usually on my first, I don't like to take partials multiple times. I usually like take 20% and let the rest run.
Okay.
Because I still like to like leave a majority of my position to get that risk reward, you know what I'm saying? But at least I'm not leaving everything on the table.
Okay, well, by the time this airs, we might actually be able to see how that played out and whether or not they go back.
What's going on, everyone? I want to come and do a quick recap of USDJPY, go over what ended up happening, what you could have done to potentially catch a position, and then also go over what I think is going to happen and give you guys my insights so you could potentially go use this analysis to catch a trade on your own. So we're still in the 4 hour time frame on USDJPY. The first thing I want to do is actually go over to where we were talking about price last, which was over here. You can see here, these were all the lower highs I was talking about for price to pull down. This was the breaker structure we talked about to then get a lower high, come back down, and then we were looking for an area of demand to get a reaction off of. So it ended up using this level of demand to give a beautiful entry to then get buyers in the market that gave this whole move. So if we talk about, actually, let's pull my measuring tool from the low that it hit into the demand to the high it created, 499 pips. So this was a 500 move just from this level of demand. So I think, you know, my last analysis, I did say that this was potentially going to be a little bit of a false entry to then maybe come a little lower to go. But overall, I was looking for this pullback to continue the move. So as you can see, you know, you got to give what the market gives to you. Wherever reactions happen, you got to understand and react with them. You know what I'm saying? The market isn't going to wait for you. You got to move with the market. So as you can see, after we got this tap into the level of demand, I didn't buy just off the bat because I still wanted a lower confirmation. I waited for a breaker structure up in this area, which I'm going to go to on a lower time frame. If you go to like the 1 hour and the 30 minute, you could see over here. Yeah, over here. This is where the price ended up tapping in. And the reason why I really liked it was the lows to take out, guys. I think I talked about it in the last time, but with the like lows to take out for me are levels of liquidity. So a lot of people that I think saw all these rejections. And once we actually broke this low, sellers were trying to get in. And that's, you know, all the liquidity that the market needed to then send price back up and gain all the sellers' orders. Because if you go back out to the 4 hour, let me see. If we go to the 4 hour, you guys got to understand that we had this big move down. We caught the lower high, and then we were trying to sell back down, but it already sold. We already broken lows. We had breaking structure. Trying to resell right here, in my opinion, is a trap because of all the stop losses still sitting above these highs up here. You got to think people sold below here with their stop losses like above up here. And then also people also sold below here. So where's liquidity sitting? Liquidity is sitting up here. I'm just going to draw it. Liquidity is sitting here. So if I were to just go back and press replay and we're to replay price, a lot of people look at this as like, all right, look at all the lower highs, lower highs, lower highs. I'm going to sell once we break structure. Look at broke just to tap into the demand to then get the whole move right off of it. So let me press play. Boom, just right off of it. So the reason I kind of want to point that out is because like I want to say is that if your stop loss is obvious, then you might get stopped out. It might be somewhat simple, but I really do think that if you think that your stop loss might be in an area which is pretty obvious, the market may go to that place to take you out. It's just kind of how the market moves. So understanding levels of liquidity, these had lows to take out, which also
once again, were stop losses, but then also once he broke structure to take out these lows, was actually gaining orders in the opposite direction. So once again, we were stopping out buyers here, stopping out buyers, while also getting in sellers to then get the sellers in, to then move back up and stop out the sellers, to then now get the buyers in, to then now retrace back and stop out the buyers. So
hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below.
Once again, guys, price moves from supply and demands. I talk about it all the time. Really what I'm kind of looking for now is that if I go back to that, we're still in the 4 hour, is if we actually go to the daily time frame, there's a daily level of demand that we're sitting in right here. So, the daily just broke. So when I started recording this video, this hour, this daily high just broke. I was thinking in my head, and I was going to mention this in the breakdown, was that if the daily high breaks, we're going to get some sort of move off of here, which once again is going to be respecting this level of demand. So it's really about reactions, because there's a lot of times that price will get to an area of supply and demand, but it won't give you a proper reaction or entry to take it. Just because you mark up a level when it gets to it doesn't mean you're going to take the position. You got to have different entry criterias and reasons and influences to get in to make your entry kind of valid in your opinion. So the reason that now we've actually created kind of an indecision doji candle, broken the highs, I'm now kind of looking for buys. We've been kind of bearish right here, not kind of, we've been bearish, but I think about, once again, the sellers that have controlled the market, and what do we have to do now? Pull back a little bit. The market moves in higher highs, higher lows, lower highs, and lower lows. So the fact that we had this big bullish move off of it, we broke highs, took the liquidity, and now we've coming back all the way back down to tap into this level of demand. And now we're breaking highs into it. I just kind of want to go to lower time frames and understand that, we kind of accumulated here. We'll see if we get the distribution, and then we'll see if we can kind of retrace down into a level of demand. So I'm not going to buy just off the bat, but I'm going to understand now that we're respecting the level of demand, a higher time frame. It's a daily, 4 hour and 1 hour. So, we're respecting that level of demand. We're getting a bullish move off of it. So now that we're coming up and breaking structure like this, I'll now wait for, price to come back in and give us a reaction in the hourly level of demand. So this is the hourly. We can even go to a 15-minute. It's going to match up. You can see there's a 15-minute level right here. Come down here, put that, mark that as, 15-minute level. And then if you go to the 5-minute, it's going to match up also. But this would be the level in which, now that we've gone to break a structure, pull back into to see if we can get an entry to then get that move off of it. So, I'm going to hop back out of the 4 hour and kind of, explain that, got sellers in just to stop them out. Now we've gone buyers in. Now we're coming back down to stop them out, because if people did not take their profits up in this area, where are their stop losses sitting? Below here even, and then obviously potentially down in this area. You know what I'm saying? So, a lot of people who even had their, entries at break even for right here, that got the entries here, are now getting stopped, thinking that, the price is maybe going to sell off now, but this is actually where price may get the bullish move off. So go back out to the daily level. I want to see if we can get a bullish move off of this. But if not, we got to understand that there still is a daily and 4 hour level of supply up in here that I will be paying attention to. This is the daily, but I'm just going to mark up the H4 now just to go here and then define it a little bit on the H4, which would be right here. So there we go. There's H4 right here. There's another one right up in here, but I would say that this kind of is in confluence with the daily. So if we can get a pullback up into here and then get a reaction, I'll still look for sells. But until then, I'm going to try and catch the buys off of this daily level of demand. So, you could maybe think like, oh, he's talking sells and buys, but it's because we have how many pips? We have a whole 240 pips until we get to that area. And I'm kind of a scalper. So that's a lot of pips for me to just wait and see what price does. No, I'm going to consider this a break of structure. I'm gonna go to a lower time frame, wait for a pullback into a level of demand, wait for a reaction, and then take the next high to then see if I can get a move up, and then see if I can hold to the risk to reward to see if I can get that whole 270 pips. Because how nice would it have been if I put just buy stops in this area of demand down in here when we talked about it earlier. You know what I'm saying? I would have had no drawdown if I just like this. I would have had no drawdown. I would have literally went like this. Even if I would have put the stop loss below this level and had a 50 pip stop loss, once again, with 500 pips, so it's going to be easy, like 1 to 10 setup almost. Yeah. So as you guys can see, that's what ended up happening on USDJPY. I'm looking for the bullish move off of here after kind of having this, pull down. So
like I said, I just want to give you guys a recap, go over what ended up happening, what you could have done to potentially get a position. Like I said, I waited for kind of a break of structure, retest, and then look for buys heading all the way up. But now that we've came all the way back down into this level of demand, I'm also going to look for a similar pattern and look for the same type of play. So hope you guys take this analysis, go potentially you can catch a position, and I hope this made sense to you guys and you guys liked my breakdown, enjoyed my breakdown, and yeah.
Hey, look, Luca, thank you very much. That was an awesome breakdown. And was there anything else you wanted to share on that?
No, I was just trying to think if there's any other trades or anything that. The one thing I wanted to kind of just point out to you, because this was a trade I took a couple of days ago, was waiting for a high to get taken out before the trade. So just like quickly that we went over in the podcast is that whenever I have a supply created, I love when there's a high to take out, because that to me is showing that there's liquidity being taken before tapping into the zone to then get the overall move. So this isn't like the best example because it wasn't a big risk reward play, but I closed like a 1 to 3. I think it went 1 to 4. Yeah, 1 to 4.11. So I just wanted to kind of like point that out, because in my opinion, guys, we have a level of demand right here that was created on an impulse like this. If we come down, actually I shouldn't put that low. If we have an impulse from the demand and then we get a slight pullback, usually what happens is it hits off, gives you an entry, and then continues down to hit your stop loss. You're getting in right here, stops below the zone, and you're getting stopped out. So how I was able to counter that is I literally just wait for the same type of impulse to kind of happen, where you get the demand created, you get an impulse, and then we kind of come down and actually form a low to take out, because now there's actually liquidity of people who are buying up, like right here, stop losses below. So now that those people are actually getting stopped out to then get my entry, which is right here, which I'm getting in right here, and then targeting at least the high of the structure, if not higher levels, to just see the hit. So I just wanted to point that out to you, because I know we voiced it, but I just, like I said, just really like a low to get taken out before tapping into my zone.
Lovely. Brilliant.
But thank you so much for having me. I really appreciate that and giving me the opportunity even to come and being able to show you guys and break down some charts for you.
Well, look, I think that was awesome. Now, one last question before we wrap up here. Did you actually take that on the live stream that's on your channel, or was that a private live stream? Okay, right. So
the UJ one last night, the G one I called on live stream, but the UJ one was live, but just for my VIP chat. On Wednesdays, I just do VIP. The other 3 nights I do on YouTube.
Okay,
sense.
Cool. So it's not on it was just the VIP chat. I was going to say we'll hook up the link to that, but that's all right. Now, before we wrap up, what is the best way for people to get hold of you?
You can follow me on Instagram at Luca NoLimit. I have a YouTube channel also called Luca NoLimit. I have a bunch of videos also going over my strategy if you want to check that out. And if you are interested in the live streams, I live stream and live trade called Live Signals for you guys for completely free 3 times a week, Monday, Tuesday, Thursday on the Trading with Clarity YouTube. So you guys can check me out there.
Awesome. Brilliant. Well, look, folks, what we'll do is we'll hook a link up below this video to not just all of that, but his podcast as well. So if you want to hear that podcast, then head over there. And whilst clicking down there, around there, hit subscribe, like, and that notifications bell, and we'll see you in the next episode.